According to CNN, the economy is in good standing. Now, that's contrary to what a lot of Americans are saying in general, that the prices have risen, ownership of home is nearly impossible, and the cost of living is super high. So how does that affect the insurance industry, and what can we look forward to, or what can we see in the future that we've been seeing in the past? In general, the insurance industry has been on fire. If you're in the home, the auto, we call it personal lines, P&C, property and casualty, and starting to become commercial, right? The commercial world's starting to become on fire as well, to where insurance companies don't want business. It's kind of crazy that this industry has switched from competing and being competitive to, are we going to even keep our doors open tomorrow? If you are in that industry and you felt that hurt or that burn, let me know in the comments below. I'd love to see where your company, agency, you as an agent has been sitting, how well you've gotten through it, and if you've even seen that impact. Now, me personally, I've seen a lot of different articles and I've seen a lot of different things, and owning an agency and running an agency and growing an agency, I haven't felt that as bad, but I have felt it pretty heavily. Let's go in a little bit of my experience, but I also wanted to give you some facts, some numbers, and some research that go over why the industry is essentially on the verge of a collapse. I've got some numbers pulled up here. We've got essentially homeowners in 2023 have lost $15 billion. That's $5.9 billion over last year in 2022. So going into 2024, not all the numbers are out, but we're getting a lot better there. And part of it is because 10%, I think 15% of the people under 40,000 income don't have insurance anymore. They've essentially left the insurance industry, which is a good and a bad. It's good because the insurance companies aren't even offering insurance to that type of person anyways, mostly because of the conditions of the home, not necessarily the person, but it's like the maintenance isn't there. The ability to afford the home isn't there either because, again, the economy, the cost of living, all of the things have to go to food. They have to go to your car. They have to go to working. They have to go to the things to survive more than they have to go to, is my house going to be okay? And it's one of the unfortunate pieces that we're seeing. Another unfortunate piece that a lot of people have relied upon is the GoFundMe world. And that has dissipated because the people that were making money, that were funding people and giving back to communities, are still doing some of that. But the majority of it has become more of a help me, to where that's just not available anymore. So that has been a big downfall in general. I've actually tried it myself because I had a friend that was going through cancer and chemo and all that, and I made a video and I posted a link, and it just didn't take off. The video did decent, but it just wasn't something that a lot of people, it's when you see everybody going through it, or if you know someone personally going through it, I'd rather fund the person I know than the person I don't. And we're seeing a lot of that happen. The other part that you're noticing is climate change has destroyed the industry in general. The homes, the autos, they're going through hurricanes. We're going through more wildfires in California. We're going through more floods and hurricanes and freezing rain, and things that shouldn't be in Texas are hitting Texas. I just came back from South Carolina and they just went through a huge tropical storm that annihilated small sections of the state. It wasn't so bad when I was there, but luckily I was at the tail end of it. And it's just, those in general are predicted from insurance companies, but if the prediction model is wrong, which it has been in the last 12 to 24 months, then it's gone crazy. Actually, I'll show you a picture. So look at the graph. That's just one photo of, that's actually Florida's housing market as far as insurance goes. And their underwriting losses are just astronomical. So insurance companies are losing their shirts from day to day. That's not to say that companies aren't profitable. There are companies. I think I just saw an article where Chubb was up almost 20% between this quarter from last quarter. And that's the part that we're starting to see the industry start to flip. Because what's happened is we've gone into a hard market where we're just going up in cost, up in cost. Too many things have happened. They're called black swan events, and those have happened way more than we expected, with COVID hitting, with people going out of, not working, they're working from home, and then now they've essentially gone up and they're moving back towards that, but the underwriting losses have to be made up for. So what you're seeing is these insurance companies are raising 20 to 30 to even 60, 80%. I've seen one go up over 100%, and they're willing to lose the customer because they don't want the business to stay on the books that's a higher risk. So those higher risk zones, those area or territories as we call them, they're going to have a larger increase, and that's where you're seeing most of the people that make less than $40,000 a year can't keep the insurance, because not only that, they're usually in a zone where the cost of that insurance is going to be double the cost that's in a good area. Now keep in mind, I'm talking good area as far as the location and risks. It has nothing to do with the value of the homes, the value, the money that you make. It's all about how many claims come in, who takes care of their homes in these areas, and what kind of risk do we have of theft, flood, weather-related things, the home, the age of the home with the roof claims, and are the roofers going through and doing false claims through your neighborhood? And so things like that are affecting the cost. Now, because of the way the economy is, and this has always been a factor, the amount of false claims and fraud have increased, right? That's going to naturally go up because people look towards insurance because the money is in insurance. If I don't have any money, I can burn my house down. There's 400,000. Like, yeah, if you get caught, you're done. Like, I get it, but that's the way a lot of people think. So there's that possibility of the fraud happening as well. Other states like Louisiana haven't been hit as hard, but they're having more claims and they're having a lot of issues. They've gone up to be one of the highest states for insurance now. States like Michigan have always been the higher ones, so we're kind of used to this. And so it's kind of a normal thing for us, but it happens, and we've had large increases as well. We're probably seeing the 20-ish to 30, maybe even 40%, but the weather-related claims aren't as heavy. There's more accidents and more deaths and more injuries, and that's something that we're seeing. Now, the financial impact I'm seeing is because of two things. One, I run a YouTube channel and I get paid on ads when they run. So I make extra money when YouTube ads are ran. And I literally have knocked 80% of the ads are gone. Like, people just aren't marketing because they don't want that business. I've personally seen that impact of the industry. I'm starting to see spikes. So every month and a half, it literally triples and then drops back down. It's like a company goes in, says we want all the business. They may realize I didn't want to spend that much and go back. Like, there's different ways that that works. So on a personal aspect, I see that spike up and down. The second one is directly through my agency. When we first opened up our agency in 2021, we saw that the growth and everybody was on board. We had all these companies letting us write with them. I should show you a report. I had 12 companies given rates in our rating software, in our EasyLink software. And it was like, boom, boom, boom. Here's Hartford, here's Nationwide, here's Progressive, here's Safeco, here's, like, everyone's competing. You go to our rater now, 3. You're 3. And they're not even right. Like, you got to go into them. So, like, I have to now, where it took me 5 minutes to get a quote, 10 minutes to get a quote, I have to go through every carrier and know that if there's a water claim, these 3 carriers are already out. So being denied in general is something that isn't happening. And that's what creates a hard market, is when the underwriting, who is supposed to protect the company and the business, is being very difficult. And they're doing that not to make you angry, not to make me angry, and not to say blah, 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 but they're doing that to protect the company's profits, let alone their ability to stay open. And sure, I know a lot of you are going to probably be partially right, where there is a partial greed, some of these companies, and that's where the industry got the bad rap. But there are companies that are greedy, and they are out to just nickel and dime every piece and every nick and cranny. It seems more like that from an agency standpoint, but when you look at all the articles and you start reading them, and if you've been doing that for years and just keep researching the industry and what's happening, what's changing, you're going to notice that that's not always the case. There are a few. There's a couple out there. Luckily, I don't know them directly. I don't work with them directly. But there are a lot of companies out there that do want to just make every penny they can at the expense of a consumer. So what's next? I expect the industry to start to flip. I think what's happening is every once in a while in our rating software, a company pops back up. And I think they're testing this. We've noticed that even Geico is starting to offer appointments. They're starting to realize that independent agents is probably the most profitable, or the next profit, like mass profit option, because we can look at the history. Nationwide used to be like a Geico and a Progressive and had their own options, and then they tested the waters with independent agents, and now they only work with independent agents. Because even though they know that you're shopping all of these companies, they know that some of the good clients are the clients, if they price the model right and they put it where they need to be, they may not be the best price, they may not be the most coverage, but that right fit for the right agent knows that that's a good fit for a customer. And so that helps them hone in the type of customers, as long as they can keep the bad agents out of the mix. Because some agents, they just go in there and they don't care. Write anything I can, write everything I can, get the cheapest I can get. Like, just throw it out to the people, cheapest coverages. You're not covered here, but I didn't know that. Like, so they got to protect that too. As long as they've set those underwriting guides in place and they can hold you to it, then they're going to start to reverse, which they are. And that in general is helping the industry. Reining it back in, I get on tangent. Let me know if this is just me being stupid as far as talking. The industry is going to change. I think that the industry is going to start to creep back up in 2024, at the end of 2024. Going into 2025, we're going to start to see a carrier or two carriers open up appointment books. Now, they're going to get flooded. Everyone under the sun is going to try to get appointments with these guys when they happen. I will let you guys know when I find them. I'm going to keep up to date with some of this stuff for you. When those carriers come live, you jump on them, you get appointed, and then they're going to probably shut the doors right away because it's going to be too much. But that's going to cause other carriers to say, okay, have we made our profit? Are we back to profitability? Can we survive the next 10-year plan to get back to where we should have been? Because it's really just delayed them 10 years. And if that's the case, we saw so-and-so open their doors, let's try it too. And then when they open the doors, less people are going to jump over because they've already moved all of their, like they've already moved and they got that carrier. You just don't want 1,000 carriers because then you're just diluting everything. So they got their carrier, and then they're going to open doors. Less people are going to join in, and then another one, and then another one. And before you know it, we're going to be back to normal. I think at the end or middle of 2025 is when that next shift is going to switch. And then 2026, the first quarter, this is kind of me just throwing numbers, but the first quarter to the middle of 2026, we should be back to normal. Pending no major weather-related claims, no major losses. State Farm cannot go bankrupt because that'll just flood everybody. Like there's all of these things. Like pending none of this happening, we should be fine. Let me know what your thoughts are. Do you think that is realistic? That's my prediction. I would put money against it as if I was betting on the Lions. Go Lions. In general, I think that is the way the industry is happening, the way it's happened, and the way it's going to happen coming up in the next few months to years. Let me know what your thoughts are. If you think it's crazy, let me know in the comments below. If you're on board and you think, yeah, I mean, either way, I'm shooting for that. I'm expecting that to happen, and I'm building this channel, my agency, around those thoughts. Now, if it expands a year, 5 years, it doesn't matter. Like, the growth that we have is going to come back. The competitiveness is going to come back. The economy hopefully will either crash or come back. It's got to do one or the other. Like, we can't just stay where we're at, right? So we've got to move forward in either route. I'm Mark W. Flockhart. I'll see you soon.